Well, everybody, I'm Cantonese Cat. Everybody, Cantonese Cat, and go for 10 fintech stocks because the economy is so scary, macro is so terrible. Rates are supposed to have gone up because the Fed won't cut, but it's been plummeting. So what the heck is going on? Let's look at fintech and try to see these economically sensitive stocks and see how they are, whether or not there's any macro scare that you can really pick up here on these fintech stocks, whether or not we're at the beginning of a very vicious downtrend, or is it just a simple correction? And I'm going to try to look at about 10 fintech stocks here. First of all, look at SoFi. This is one of my biggest positions. If anything, it looks like we just kind of broke about this horizontal zone over here and we're doing a little bit of a back test, doesn't it? You look at the volume so far, the last 3 weeks has been pretty scary. You have some pretty increasing volume over the last 3 weeks with this downtrend over here. I bet everybody got really super scared of that, right? But if you look at a higher time frame, look at the volume over the last few months during this downtrend over here, volume has actually been kind of declining. So far, we still have another two and a half trading weeks to go. So this candle is probably going to end up having some pretty decent volume when this is all said and done. But even then, just look at a monthly, just back testing this horizontal zone over here. If you look at Ichimoku Cloud, it's back testing the bottom of Ichimoku Cloud, the immature Ichimoku Cloud, the leading span A, whatever you call it, back testing the kitchen over here, found a very, very confluent zone, right? And found support over here around $11, right? On top of that, it's also possibly even going to reclaim the Tenkan here on the blue line here by the end of the month potentially, if we end up just being a pretty nice wick over here. And that would actually be a very, very bullish thing, right? The other thing to show you that I think this is a very confluent zone here, I'm going to have to go to weekly for this, is the 0.5 FIB level, right? Which is right around $11. We bounce off it. So far, we're forming a very nice hammer. We did break down underneath this arc over here. Initially I thought, hey, if it breaks down underneath the arc, it can go all the way down to about 10.4. If it breaks below that, it can go down lower, but it doesn't have to. But we're so far holding the 0.5 FIB level here pretty decently. So we'll see whether or not this continues to hold. If it turns out to be a very, very nice hammer candle here, that could be bullish. Usually these things signal for a pretty strong reversal after you form a hammer candle like this. Not guaranteed, but probability-wise speaking, this could potentially be a strategic bottom for this downtrend. The other thing to kind of pay attention to, I think it's just going to moonshot, make a V-shaped recovery, just keep going up a lot higher. Not necessarily. You do have a more support band over here that's going to turn into a little bit of resistance by the time it gets up to around 13, 14 bucks. That's going to be now resistance, right? We're going to have a little bit of a hard time just push through that and probably end up hovering around that before breaking out and having any further bullish continuation. But so far, everything is pretty healthy. On top of all that, it's also hit the lower Bollinger Band here on the weekly. Just a lot of confluent zone where we're finding support here. If you look at the monthly Bollinger Band, it hasn't even bothered to hit the 20-month moving average all the way down to 9.7. And sometimes it does that, and even if it does that, it will still be bullish. But I'm not really seeing it wanting to do that right now. I see it already finding a pretty good, decent support zone around $11. It's bouncing from that. So if SoFi does well, I just have a hard time really seeing the overall economy, really tanking and really having a hard time seeing anything bad from the macro perspective, quote, quote, right? Affirm, same thing. You just look at the monthly. It's basically backtesting horizontal breakout zone from resistance here to support, right? Look at all these wicks over here. Look at this candle over here. Look at this wick over here, right? Basically just backtesting a horizontal zone and support. Nothing really scary about this. Putting up the Ichimoku, same thing, backtesting the Kijun, right? At a very, very important confluence zone. Maybe even this month, we might even close back above the Tenkan, the blue line over here too. I'm not sure we're going to end up closing above the bottom of the cloud over here at the leading span A, but that's still a pretty decent look to it. It got really close to the 20-month moving average. Didn't really end up touching it, but this correction over here is warranted because things have just kind of gone all the way from like 20 bucks all the way to about 80 bucks without any kind of cool down. From 80 bucks cooling down to 40, something that could be extremely scary for a lot of people. But these are high beta stocks, right? So I just wanted to get into consideration. The other thing too is so far on this downtrend, we have really not much volume here for Affirm. I don't think there's really that many sellers. I think it's just a normal correction that needed to happen based on, quote, macro scare, unquote. Right? Look at how the 7-month downturn over here on no volume. Next thing you know, you have a big giant reversal. I think we're going through a very similar process. How low does it get with declining volume? Does it break below this horizontal zone? It could always do that. maybe even get back down to the 30s. If it does that, it's still going to be bullish if it's happening on declining volume, which I think is doing that right now, as far as I'm concerned, right? So something to concern if Affirm is doing well, and this is one of those stocks that have been trashed because they're a buy now pay later model, has been absolutely trashed and saying that this is the trash of fintech, what have you. A lot of people have a lot of opinion about Affirm, when the reality is that it broke above the 0.236 here, and got rejected at 0.382, and come back test the zone over here. There's nothing unusual about it. If we're able to hold, I think we have a good chance of breaking through the 0.382 something in 2025, and then hit the 0.5, which is going to be next, right? Which is going to be around $92.64. Shopify, it did something that I thought it was going to do, but I wasn't sure when it was going to do it and what the catalyst is. I'm actually still not sure what the catalyst is for Shopify to backtest the monthly Ichimoku cloud after breaking out of it, right? Resistance over here, flip support. Not a bearish thing, right? Also right around the zone, around $91 is when this wick over here was. Basically, this is the horizontal zone here, flip from resistance to support right at the cloud. None of these things are really that bearish based on the morphology of it. So I'm just not really entirely sure if I'm convinced of anything bad going on when Shopify is doing exactly what it's supposed to. Even if this is like a Canadian company, even if we have like Canadian tariffs and whatnot, I'm just not really picking out anything bad here. It's not even touching the Tenkan down here yet, right? When price is way up above the Tenkan over here, Tenkan is like $90, price is like 130. It's not really sustainable unless the Tenkan shoots up, which it hasn't. Then it's going to probably end up gravitating back down close to it, and that's exactly what Shopify is doing right now. Still a higher high, high low type situation. Not anything really bearish about this stock. Another stock that is in a very, very similar road is Mali. Mali is a little bit more of a Latin American Amazon, if you will. And even Mali is forming, for the most part, higher highs and higher lows. It's having a little bit of a hard time breaking above the previous all-time high over here. But I think we're getting close to it. We're just basically trying to ride the Tenkan here in a systematic manner. The Tenkan is blue line over here. In a stepwise fashion, the ride on the way up. We're not overextended. We're doing what we're supposed to. And during the entire process, the 20-month moving average continues to curl up. And the upper Bollinger Band continues to oscillate around and trying to get to higher levels, right? You can say that if you look at the log scale chart over here, that there might be a little bit of bearish divergence here on the monthly, and you'll be right. I see some bearish divergence here. So are we going to end up having another back test of the 0.886 or even the 20-month moving average before further bullish continuation? Possible. Is the bearish divergence here already been resolved? Maybe. But I just don't know, how long the correction is going to be, regardless as to higher, no type situation. Even if it comes back down and back test the 0.86 when the 20-month moving average is going to curl up right around that zone, it's still going to be a bull trend, right? So I'm not really that bearish on this. Now, finally, one stock that has probably a lot of people worried is Robinhood. Why are people worried? Well, you got a little bit of an evening star look to it. You got a bearish engulfing candle here that we're trying to turn it into non-engulfing, right? We have a big giant wick down here below. What gives? Well, I think this is something that is completely expected because you just simply can't have price being way outside the blue line here, the Tenkan. What happened last time was way outside the Tenkan. It decided to plummet back down, back test the Tenkan kitchen before further bullish continuation, make a big giant wick up here. Is that what we're going to do? Very similar to what happened back in August? Maybe. Or maybe we just end up showing a lot more weakness, and it might end up breaking the parabolic bull trend that we have here and just end up going sideways for longer and have a loss of opportunity cost here. Maybe that's a possibility, but so far as higher highs and higher lows, I'm not really convinced that the trend has changed quite just yet because the Bollinger Band is still very, very impulsive, even if it started crawling up here a little bit. The Bollinger Band is still curled all the way down, so I think the bull trend has a strong likelihood to continue over time. It simply got rejected here at 0.86. I'm actually kind of surprised it hasn't come back and hit the 0.618 quite just yet during this downtrend, and it may not need to because it's holding the Tenkan and Kijun up here. So Robinhood, yeah, a little bit warning sign over here. You're going to potentially see some weakness because this month's candle in combination with last month's shooting star candle is saying that, hey, momentum is losing here. You just can't go up to the moon just like that. So you might end up having to go sideways here for a little bit longer, may even come back in 0.618. That's possible, right? But I'm not going to hold my breath on it because it's still holding tank in the kitchen. I'm not going to hold my breath on that, right? If you're looking at the weekly has broken underneath the tank in the kitchen over here. 2 week is kind of broken underneath the tank in the kitchen over here. So you're going to have a little bit of a resistance on the way up. I'm not sure if it's going to V-shape from here. You're going to end up having some resistance here on the way up, right? But that support band, you also broken down underneath that. So that might also potentially be a little bit of resistance underneath. But I wouldn't worry because things break down underneath that support band all the time. It doesn't necessarily mean that a bear trend has to start. And so far on the weekly, we see a pretty decent hammer looking thing over here, right? We're way above the cloud. The thing that things have to come all the way down to the cloud. No, not necessarily. But I can totally see a scenario where it hits the 0.618 and hit the cloud and go a lot higher. I don't favor that scenario. I think it's probably going to end up just slowly grinding its way back up to the 0.86 and challenging that sometime by like Q2 of 2025 is kind of what I'm thinking. But yeah, it's doing its correction. All this correction is completely necessary. So we're just going to keep going through it, right? PayPal, what did it do? PayPal did two things. One thing is it got rejected here on the arc over here. Come back down, essentially backtest the bottom of the arc over here, and also backtest the Ichimoku cloud here almost perfectly on the weekly, right? So I think that this is a move that is completely necessary because on the way on the move up here, it just looks very, very much of an exhaustive top. It just simply needed to kind of correct here based on volume, right? You have a big giant move up here for months and months at a time on declining volume, and you plummet on increasing volume. This move needed to happen. Now that you hit the cloud, I think most likely it's going to end up having some pretty decent support here. Can you break inside the cloud and top test the bottom of the cloud? That's also possible. But I think once you hit the cloud, I think we got a pretty decent zone of support here. Bollinger Band at the lower part has already been pretty overstretched. I don't think it has to go down that much further anymore now that we've hit the weekly cloud, right? On the monthly, it's showing weakness, but it's also hitting the 20-month moving average, right? So if you basically break out and backtest the support zone from resistance, it's not a bearish thing. On top of that, you are breaking down underneath the support band here. So that's going to take some energy to try and push through. So I think it's probably going to take a couple months before, at least before you're able to hit back in the 80s and 90s. But this is also very much of a horizontal zone over here, right? There's backtesting. There's nothing unusual about this. Just like SoFi is backtesting a horizontal zone, right? Just like Affirm is backtesting a horizontal zone. Just like Shopify is backtesting a horizontal zone, right? Mali is not. It's backtesting a horizontal zone for a previous all-time high. Robinhood, maybe not. This is just extremely bullish looking, right? And PayPal is doing the same things, backtesting a horizontal zone. That's all PayPal is doing. Square or XYZ backtesting a horizontal zone. Unfortunately, it's not backtesting this horizontal zone. It broke down underneath of that, and it just decided to go for violence all the way down here to the bottom of the zone. It broke down multiple support. It broke down the Ichimoku cloud here on the weekly. It broke down the blanket support band here pretty severely, right? And if you're looking at the monthly here, it went for violence. It just broke down underneath the 20-month moving average, right? It broke down underneath the tank in the kitchen over here. It just broke down a lot of things. I guess earnings just was just that terrible. But regardless, it's still going back down to this horizontal zone, right? So this is the bottom of this range over here with a deviation, right? Top of the range, bottom of the range, deviation. Bottom of the range, probably good risk reward ratio. I still think there's potential to double up, maybe sometime around late 2025 to go back to up the cloud over here, assuming that the fundamental of this company is still intact, which I'm not sure. I mean, I don't know how bad earnings was. It decided to just break down multiple support levels, which is just absolutely insane. So to me, I don't think this chart's broken, but I don't know enough about the fundamentals to make me be very clear it's just going to end up keep on going up from here on out. I'm just going to stay put. I mean, this is a pretty vicious downtrend, but it's at the bottom of the range. So if you decide to buy, if you're a trader, to trade the range is not a bad area to be at. I also happen to think that this is a big giant accumulation zone, so it might not be a bad area to accumulate, but who knows? Upstart. What is Upstart doing? Backtest a horizontal zone, right? Just like all the other stuff, right? Upstart getting close, not really even getting close to the 20-month moving average. It's still a bull trend, right? Higher highs, higher lows type situation. Look at Ichimoku, it broke down underneath the Tenkan Kijun. We might have a chance for it to break back above the Tenkan Kijun here for the month of March. We'll see. If not, that's okay. The month is still young. There's really not much volume here so far. We'll see how it transpires. But even Upstart doesn't look that bearish, right? Because it's still about the 20-month moving average. This is still a renewed bull trend after a big giant vicious down. You're basically forming higher highs and higher lows here. So not enough for me to get worried about. 4 Shift4 payments. This is basically testing a horizontal zone, right? Breaking out, back testing, not a bearish thing. Not a bearish thing here at all. Look at Ichimoku is holding Tenkan Kijun here just fine, showing some relative strength. 20-month moving average all the way down here. It looks like it wants to maybe just continue to go up higher after backtesting a horizontal zone, which is currently doing right now, right? Not anything to really get me concerned about right now. If you look at the Fibonacci, it basically just broke out of the 0.786 and backtested 0.786. That's not a bearish thing. So I think this might be a decent area to potentially add if it breaks down to 0.618. That might be even a better area to add. Maybe it wakes down there below a rising 20-month moving average, which should serve as some pretty decent support. Shall it get down there? But there's no guarantee it has to get down there because it's testing the Tenkan Kijun up here above and it's holding 0.786 here so far, right? Finally, this new holdings, I don't know. This is rough for me because I do see a big move up already has been made. It is coming back and back testing a horizontal zone over here. During the process, the 20-month moving average is being challenged over and over again for months, right? It looks like we're breaking down underneath of this. Now, because we've already made a big giant move up, it does make me a little bit skeptical in terms of trying to buy into a flattening 20-month moving average from an upsloping 20-month moving average, right? I'm a little bit skeptical here, so I'm going to end up just not buying into it, although this could potentially be a pretty decent bottom here because on the monthly, it's showing a bottom hammer right at the Kijun. When things a little bit too far overextended, come back test the Kijun down here, it's not a bearish thing. It's just, I don't know, I don't have a good read of this. If the rest of the fintech goes up, I still think that it's probably going to end up doing pretty well because all it's really doing right now is just basically getting rejected 1.4 and 4 and coming back down, back test to 0.618. So not 0.618, 0.786. This is not bearish, with the exception that I think this back test has been going on for way too long, and it's just holding the 20-month moving average, and is flipping it from being positive sloping to more flat. So I'm seeing a little bit more warning sign here. I'm not going to get into it, but I cannot really be that bearish because of the fit level that is challenging right now is holding. So anyway, if you look at all these fintech stocks, they don't look bearish for the most part, right? SoFi looks great overall. Affirm looks great. Shopify looks great. It's doing what it's supposed to be doing. Robinhood was just way overextended. It just need to come back and be punished here. How far down does it get punished? Nobody really knows, right? But yeah, it's not a bearish chart per se. It's just way overextended. PayPal is basically repairing itself. It's becoming more bullish. It's holding 20-month moving average. So yeah, Square's underperforming. Upstart's doing pretty decent. 4 is doing pretty decent, and then New is just kind of running too far too fast. Do I think that the economy is in shambles when fintech stocks actually look like they're doing okay? Hard to say, right? Very, very hard to say. I'm just skeptical of the whole bearish narratives at this point because of looking at this. With that said, I am looking at QQQ, and QQQ is showing a lot of weakness over the last few weeks. I'm not gonna deny that, and I'm gonna keep on monitoring and see what the Nasdaq and the QQQ does, because that's also a very, very important indicator in terms of how the overall economy is doing and also how the liquidity conditions are doing, right? But I just have a hard time being too entirely bearish because just looking at what the fintech stocks are doing, they're able to actually accomplish a lot over the last couple of years. Again, things change fast. There's no guarantee what I'm seeing right now won't change. But so far, I'm not really seeing anything that's terrible for me to get too concerned about when it comes to fintech. Anyway, guys, take care. Bye.